Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about ARM Holdings, the AI and tech company. So guys, I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. Now, this stock is up a whopping 50% today. We're going to be talking about is now the best time to invest in it. So guys, I hope you guys enjoy it. Like, subscribe, do what you guys do, and I appreciate every single one of you. So guys, for those of you that are new to the channel, my name is Carter. I'm a full-time trader in the stock market. I do have an amazing school where we talk about my strategies on how I find stocks and my strategies. We have live streams, we have group chats, quizzes, lectures. Sign up, Swing Trading Masterclass down below. You guys can use code LIVE for $50 off. So make sure you guys sign up and I'll see you in there. So let's dive into this. So what is ARM? Well, ARM is it's a AI tech company that's heavily invested, obviously, into artificial intelligence, technology, and there was a bunch of hype about this stock when it pretty much came out late last year in 2023. The stock got announced and it immediately popped up. You guys will see it pretty much went from about $55 all the way up to about $70 and then slowly started stair-stepping its way back down to lows here at about 46 bucks. Now, recently, we've had this great upward trend where the stock pretty much was slowly growing up. It went from $53 all the way up to about $80. There was a lot of growth out of it. And one of the reasons why we're seeing so much momentum, in my opinion, out of AI is because we're seeing companies like NVIDIA, NVDA, which is another AI tech giant. This thing has had an absolute roar up, up over 200%, in a single year. So ARM is kind of falling in that path. You guys will see it has this great upward trend, and then as of today, this thing squeezed up. Now, anytime a stock squeezes up 50% in a single day, something major is going on inside the business. And they did announce a couple of things here. Let's go ahead and look at the first thing here. So the first thing we saw was ARM holding a price target raised to about $105 a share from $65 a share by Barclays. Now, anytime you have that, you're going to have buying pressure involved. If the stock's under, 65 bucks, you're going to have this thing start squeezing up just because a lot of people look at, Barclays and say, oh, they know what they're doing, I'm going to buy it. So that's kind of one of the reasons why we're seeing so much buying pressure. On top of that, one of the other reasons why we're seeing a lot of buying pressure is because, let's go ahead and look at this article here. So the shares of the chip designer ARM, which, ARM, spiked nearly 20%. Now it's up 50% after hours trading. The company delivered better than expected quarter three results. So they announced heavy revenue. They beat expectations on their earnings report, causing more buying pressure involved. So before every earnings, Wall Street will give some sort of prediction. Now, if the company beats that prediction, this is going to cause a lot of buying pressure involved. And if they miss that prediction, this is going to cause a lot of selling pressure. So they beat expectations, causing the stock to skyrocket. On top of that, it witnessed strong momentum and tailwinds from artificial intelligence led demand, which drove its overall sales and earnings forecast. So obviously, anytime, in my opinion, a lot of analysts and a lot of people think that AI and technology is ready to grow at about 37% annually for the next 10 years. So we're going to see companies like NVIDIA, ARM, maybe even companies like Tesla, Apple, Microsoft, all these tech and AI giants, they're going to be getting a lot of buying pressure involved just because AI is this new sector that a lot of people want to invest into. Some people think it's going to be like investing into Apple when it was first started, or Tesla, a couple years ago before the overall craze. But personally, what I think we'll have is some sort of bubble where we'll see a variety of companies like ARM, like Tesla, like Microsoft squeeze up, and then we'll start slowly seeing sell-off, just like we saw with the overall electric vehicle phase, where in like 2020, 2019, everybody was buying electric vehicle stocks, and now, all those companies like Nikola Motors, Plug Power, NIO sold off. So now we have these leaders of the sectors like Tesla, and a variety of others. So I think we'll see a very similar situation with artificial intelligence. Now, to answer that question of is ARM going to be one of those leaders? Well, one of the things here I think that's very, very important is looking at, some of the revenues. Their revenue's up 13%, which is always a good thing to see, but their cash flow is down 24%. So they're still beating expectations, but they still have a long way to go. So for me, I think a good strategy and a good approach would be to understand that ARM is a new company. It's a growth stock that's going to be a little volatile. This isn't going to be like investing into Coca-Cola or Home Depot or just these average everyday value companies. This is going to be investing into a company that can go up and down at very, very rapid rates. So what that means is if you're going to invest, I think a good strategy would be to dollar cost average it so you invest consistently rather than just buy it all at once and it could be overvalued and we could get more sell-off. So dollar cost averaging, you invest consistently so you get a good average price for your shares. On top of that, I want to go super heavy in it. I would definitely keep this under like 2 or 3% of your portfolio just because it's a growth stock. So for every $100 you have invested into other stocks, assets, ETFs, and bonds, I would put $3 or $2 into ARM. I think that's the best approach for long-term success. And if this thing does squeeze up and it is the next Tesla, you're going to have shares to make money. But if this thing sells off down to zero, you're only out 2-3% of your portfolio, which isn't that big of a deal. I think that's the best approach for ARM, and that's what I would recommend doing. Guys, I hope you guys enjoyed this. If you guys did, hit that like button and subscribe. Don't forget to check out my swing trading course down below. Code LIVE for $50 off, guys. 5 spots left, so I'll see you in there. But guys, overall, this is all my opinion, so do your own research before you invest, and we'll see you guys later. Like, subscribe, and we'll see you guys in the next one. Take care.